everybody. Welcome back to Tim and Veronika Market and Mortgage Rates Forecast. Some good news wanted to share with you. The most recent research showed that millennials are still expected to continue to drive this market. The 21 and 22 millennials participated the most in real estate transactions. And I don't know if some of you know that we have 78 million millennials in North America, which is about 31% of the entire population. To compare with boomers, they were 27% at peak. Now, the forecast for 2023 is that millennials, all the millennials and first-time home buyers will be buying homes more than any other demographic group. Hence, housing prices cannot drop drastically in 2023. Factors such as inflation, excessive housing demand, and inadequate supply continue to drive up the prices. One of the ways to increase the inventory is to build more homes, right? But unfortunately, as some of you may know, new construction industry has been practically underperforming since the last recession of 2009, not to mention that it's been almost shattered by the pandemic. So again, if inventory levels will remain as low as they are right now, the housing demand will continue to grow, which will affect home prices to go up, not as significantly as in prior years, but it would be reasonable to expect probably anything between 1 to 3%, depends on the area. I think it's still good news for the real estate market, and I'm sure Tim has some more input on that. Tim, welcome.
Well, thank you, Veronika. I concur with your assessment on home values. We're seeing that in the marketplace with appraisals, and purchase prices are not changing dramatically, not higher, but they're also not. You would expect to see a drop if you thought that the rates or that the prices were going down. We haven't seen that. But in terms of good news as well, I think part of the reason I'm sure some buyers were on the fence or were sitting on the sidelines was because of the affordability factor. And thankfully, as the Fed has continued to raise the prime rate to try to curb inflation, that's really had an impact on the inflation rate. Has come down for the fourth month in a row here in January. And so they're forecasting maybe one or two more rate hikes to keep the progress in reducing inflation. But as a result, this early 2 weeks into the new year, our rates are down at 6% and slightly below for the first time since probably, I don't know, August of last year. Wow. So it's progress. It's, if you still think of 3% rates, those will become more of an anomaly than, where we've been here in the last few months. But the good news, I think that'll continue. And, I think the housing, from my side, the buyers that are looking to get into the market now, I think maybe they think, even though it's not a seller's market, they think that they can at least get some seller paid closing costs, especially if they're first time home buyers that don't have a lot of have assets for down payment. That's important to them, so they don't liquidate everything that they have just to buy their first home. So all in all, a good start to the new year from a mortgage perspective, and suspect that it'll be a better year than most people think from a overall transaction number, because, as you said, demand is still there, and the housing starts. You mentioned builders. Builders now are holding back on starting new developments because they're getting nervous by the increase in interest rates. So we're going to see a decline in new construction just because they're waiting to see where the market will head before they spend more money on buying new plots of land for development. So,
all right, thanks so much, Tim, for the input. So what trend do you see for those who are moving forward and successful about it? I'm talking about home buyers. what trend do you see in terms of what types of loans they are looking for, and what would be the smartest way to approach this increase in interest rate?
Well, there's a couple answers to that. Number one, we have, as we discussed and late into the 2022, we had a program where we were offering a free 1-year temporary buy down to your interest rate. And I'm sure the market, the airways have been saturated with this phenomenon now that rates are higher. And basically what, again, that means is for the first 12 payments, if your rate is 6%, your first year, those 12 payments are at 5%. And after that, we'd go back up to the rate of 6%. So we're providing the cost, or we're paying and covering the cost of that 1-year buy down. And that would allow the home buyer to basically get a year with about a $200 to $250 a month savings, depending on the loan amount. So it's a good way to get into your house, and hopefully rates would improve by the time your loan would go back to the normal, the fixed rate at 6% in my example.
Thank you. And just to put it in perspective, again, the recent research shows that we can expect the rates to go down to maybe 5.5, not until 2025. Is that what you're hearing as well?
I think it's going to be a little bit sooner than that. But I think it's like anything else. Things that are happening in the future, you're going to be right sometimes, you're going to be wrong, because it's hard to predict things that will affect that. But I think we'll be into the mid fives by this time, in 2024, if not lower than that. I just think that as the inflation cools, rates are, again, not going to drop off the cliff. They're going to come down slowly, but that's what we've seen over the last 2 to 3 weeks. And knock on wood, I think that may continue. So maybe a little bit more sooner that we'll see rates in the low fives is, I guess, what I would say. So.
Well, I guess that's a great way to put it in perspective. So Tim and his company offering this free buy down, so you can get into the future sooner.
Right. Yeah, and we can do a lock-in shop, which basically allows people to lock a rate for 90 days. And if rates get better, as they have been lately, you would get the better rate. So that's another way. If you want to guarantee you're not going to get a higher rate, you lock your rate, you start looking for a home. And within 90 days, if we're closing within 90 days from the start of the lock, then you may have an opportunity to lower your rate before you even close. And that's part of the process of the Lock&Shop program. So that's also helpful. So.
Hey guys, that's another perk to reach out to Tim to discuss your mortgage needs and to strategize. Thank you everybody for joining us today. Have a great rest of your day.